In this video, we're going to review Starbucks' fourth quarter results and use our earnings model with management's guidance from today's release to determine if the after-hours price move makes sense. If you're new to our model, please visit our website, go to the Education dropdown, and scroll down to the Starbucks model, and from there you'll have a full demonstration of how this model works. And with that, we can start digging into the guidance. So you scroll down to page 6, that's where the guidance begins. Okay, fiscal year 2016 targets. And it starts with the net new store openings by segment. So you can see if you scroll down to the segment section in our model, we have set the America segment equal to 700 new stores for next year, Europe to 200, and China to 900, which is in line with management's new guidance. Full year consolidated revenue is expected to be up 10%, and we've set that target by using our revenue per store estimate for each one of these segments. Then if we go down to operating margin, the Americas is expected to have a moderate improvement from prior year. So you can see we have 40 basis point improvement from fiscal year 2015. Europe is expected to approach 15%. That's what we have here. China, Asia Pacific expected to be flat or down slightly. So we modeled that down 10 basis points from last year. And then channel development is expected to have a moderate improvement from prior year. So we have a 20 basis point decline. We can reset that. It's not going to make a huge difference there. Let's just call it 39% in the fourth quarter. Okay, 10 basis points. That's moderate. Okay, and then tax rate is expected to be between 34 and 35%. Set it to 34.5%. Non-GAAP EPS for the full year is expected to be in the range of 187 to 189. Scroll back up to the income statement. You'll see we hit that target, and we also hit it on a GAAP basis, and we hit it for the first quarter of 2016 as well. And then the last piece is the CapEx is expected to be 1.4 billion, which we include in our cash flow statement below the balance sheet here. So we changed the CapEx growth rates to reach 1.4. So after recalibrating our model to meet these estimates, the share price actually moved up slightly from $62 prior to this release to $62.75. So not a huge move, but when you compare that to what shares are doing in after hours, they're actually down 2.5%. That might be an indication that investors were looking for stronger results from a company that's trading near recent highs from a next 12-month price-earnings ratio basis. If you'd like to download this model and plug in some of your own scenarios, it's available for free on our website. If you click on the free models tab, you can register and you'd have access to all of our models at that point. Be sure to check back after the analysts update their models, and we'll recalibrate our model to meet those consensus estimates. And thanks for watching.